It turns out that Ripple doesn't want Wall Street's shiny IPO runway. What they really crave is a shopping cart big enough to fit half of the blockchain industry inside. So here's the crazy part. While everyone's been kind of breath-holding, waiting for Ripple to ring the New York Stock Exchange bell and make XRP swag the next kind of hot IPO gift bag, Brad Garlinghouse just strolled onto Bloomberg, grinned, and basically said, nah, we're going shopping instead. So stick with me because this isn't just another boardroom flex. This pivot changes the entire playbook for how crypto heavyweights actually grow, where value lands for retail holders, and why the next big wave of adoption might be stitched together, Frankenstein kind of style, right? From a dozen smaller companies that Ripple snaps up off the shelf. And hey, if you want to unpack moves like this in real time with thousands of other degens, analysts, and coffee-fueled night owls, jump into our free crypto Discord via the link that's in the description. We break this stuff down live, minus, of course, the paid walls. Okay. Picture the scene. It's a grey Tuesday. Markets are kind of wobbling like a Jenga tower after a triple espresso. And I'm scrolling Bloomberg with my breakfast burrito. Up pops Brad. Shirt crisp, smile sharp, sharper than maybe even a candlestick chart. The kind of interviewer nudges the age-old rumor, when's the IPO? Brad doesn't miss a beat. He nods, then kind of flips the narrative on its head. Ripple is not queuing up paperwork for an internal kind of, or at least an initial kind of public offering, I should say. Instead, it's actually shifting through a buffet of blockchain infrastructure targets, ready to acquire whichever dishes looks the tastiest. Now, in plain English, Ripple's skipping the kind of bake sale to buy the whole bakery. So let's roll back for a second here. For years, the chorus line went like this. Ripple lawsuit with the SEC is the cork in the champagne bottle. Once the case pops, well, Ripple files an S1, right? The stocks soar, early XRP holders retire on yachts. Well, you've seen the TikToks, right? The laser-eyed predictions of a Ripple IPO by 2025. But Garlinghouse has been, sprinkling hints for months that he's less interested in ringing bells and more interested in ringing up invoices. Because Ripple's core payments engine is already printing receipts. Now, they've grown organically, boosted revenue without, chasing venture capitalists' sugar highs, and now they're actually cash rich enough to shop for companies that plug neat little holes in their grand strategy. So, why acquisitions over IPO? Well, first, an IPO drags Ripple back into the very regulatory maze that it just spent 4 years crawling out of. Remember, the SEC lawsuit particularly turned, every quarterly kind of update into a legal thriller, right? Even though, that drama is kind of sprinted towards a kind of settlement, convincing the same SEC to greenlight your IPO, prospectus is like asking your ex to write your Tinder bio. It's awkward at best, right? Doomed at worst. Now, second, of course, with a kind of a sting of, $1 billion deals, Ripple grabs talent, tech, and licenses in one swoop. There's no shareholder scrutiny, there's no quarterly earnings theater, just pure expansion on their own terms. Let's take standard custody and trust. Last year, Ripple scooped up the regulated custodian to lock down digital asset safekeeping. No more outsourcing security, no more not your keys, not your coins tweets haunting them. Right now, they own the vault. Then, only a few weeks ago, they agreed to buy Hidden Road for a cool $1.25 billion. Now, Hidden Road isn't your everyday brokerage firm. It's a prime broker connecting TradFi liquidity with crypto markets. So think of it like a secret tunnel under Wall Street. Now, certainly, Ripple can funnel institutions straight into XRP ledger rails without the regulatory whiplash that crushed so many crypto banks in 2023. And the drama doesn't stop there. Rumor has it that Ripple slid a $5 billion check across the table to Circle, the folks that are behind USDC. Now, Circle apparently pushed it back like a cold pizza slice. Too small a tip, they said. So imagine offering $5 billion and being told to add another zero. But that move alone kind of reveals Ripple's chessboard, right? They want stablecoin artillery, on and off ramps, and compliance muscle all bundled in. Now, if Circle had said yes, Ripple would have snagged USDC's global network overnight. Instead, they got a polite, we're kind of in a quiet period, call us later, and Ripple kind of pivoted back to window shopping. Now, here's the kicker. The problem most people missed in the fine print, right? When a company kind of chooses acquisitions over an IPO, it rewires incentives. Retail investors dreaming of buying Ripple shares at IPO price might feel iced out. If there's no Ripple stock, how do you ride the upside? Well, the challenge becomes, can the value accrued by Ripple's shopping spree filter into XRP itself? Or does it get trapped inside a private company vault where only early seed investors kind of toast champagne? Now, Brad insists that the strategy complements the token. Every custody license, every brokerage channel, every stablecoin rail theoretically drives more utility and, by osmosis, demand for XRP. But utility is a slippery fish, right? We've watched countless projects shout utility while holders stare at flat charts. So let's break down the numbers, like we're kind of splitting a restaurant bill then, right? Hidden Road processes trillions in transactions annually, right? Slide that volume onto Ripple's network, sprinkle in a little enterprise-grade stablecoin that they've already testing with RLUSD, which is rumored to stands true. Well, suddenly XRP isn't just a remittance bridge, it's the grease in a multi-asset prime brokerage machine. Meanwhile, you've got standard custody secures those assets under regulatory guardrails, making institutional compliance officers sleep easier. And if Ripple eventually lands a big stablecoin issuer, it completes a vertical kind of stack. Custody, liquidity, settlement, and on-chain reporting, all under one roof. That's like Amazon owning warehouses, trucks, the e-commerce site, and your doorstep. Friction drops and volumes spike. But growth sprees come with potholes. Integration headaches can stall momentum. Ask anyone who's ever tried merging two dev teams running on different tech stacks. There's also the not so tiny matter of regulatory whack-a-mole. Right? Each new acquisition invites a fresh set of regulators to the party. Hidden Road deal in traditional kind of assets too, right? It deals in traditional assets too, which means securities regulators, commodities watchdogs, maybe even banking supervisors kind of take a peek. One single misstep and you're kind of back in court. Plus, there's cultural clash, right? Crypto narratives move at meme speed. Prime brokerages, thinking quarterly risk models. Bridging the mindset, or at least that mindset, is kind of like asking a jazz drummer to kind of sight read Beethoven. It's possible, sure, but you're going to burn through a metronome. Yet Garlinghouse appears unfazed. Now, in that Bloomberg segment, he basically said, "We're flush with cash, valuations have come down, and we like being buyers in a bear market." The translation here is quite simple. The shopping mall is half off, and Ripple's wondering, with a kind of black card here, right? Even if an IPO could raise billions of dollars, Ripple doesn't need the money, right? They need strategic puzzle pieces. A public listing might trap them in quarterly earnings purgatory. Missing a revenue target by a few million could wipe billions off market cap. Private companies dodge that circus altogether. They can think decade long and not quarterly long. Let's zoom out. Remember 2020's DeFi summer, 2021's NFT bonanza, and 2022's spectacular exchange collapse. Each cycle taught us infrastructure matters more than the hype. Stable rails, custody, compliance, those boring back office kind of chores become kingmakers when the music stops. Ripple's kind of play is a bet that the next bull run won't be about cartoon parrot JPEGs. It'll be about seamless institutional flow. Big banks, asset managers, and sovereign funds won't touch crypto unless rails feel as sturdy as Swift. So Ripple's assembling a rails to roof kind of platform, and betting XRP will be the native oil. But here's the personal twist. I've been in crypto longer than my high school sneakers survived gym class. And I've seen bright ideas sink because they kind of tried to build everything themselves. Now, Ripple's new kind of mantra is cheat sheet genius, right? If someone's already nailed custody or brokerage, just buy them, right? That's how Facebook cemented dominance, right? Instagram acquired, WhatsApp acquired, Oculus acquired. Now, Ripple's copying big tech's buy, don't build script, but with the added complexity of blockchains, tokens, and global fragmented regulation. Now, the climax kind of moment, it came, that Hidden Road's headline kind of hit my screen. $1.25 billion. Now, my phone practically overheated in my hand. Twitter Spaces spun up like tornadoes. XRP spiked. Analysts scrambled to recalculate valuation models. That single acquisition was bigger than all venture capital raises by crypto custody firms combined last year. It signaled in neon letters that Ripple isn't content being a cross-border payments niche, right? They're agile, at least angling, I should say, to become the underlying plumbing for everything from tokenized treasuries to equity settlements. If they kind of integrate RLUSD across Hidden Road's client base, well, they're then suddenly kind of staring at a stablecoin that can swim in both Wall Street and Web3 pools without needing to kind of towel off. And so, where does all this then leave the IPO dreamers? Realistically, the door isn't slammed shut forever. Garlinghouse stated plainly that fighting the SEC made a kind of US IPO difficult, not impossible. Maybe, once dust finally settles and regulators get friendlier, Ripple revisits that route. But for now, the fast lane to scale is acquisitions. As an XRP holder myself, I'm betting utility wins in the long run. If the token truly sits at the heart of all of those new services, the rising tide should float it. But I'm also hedging, diversifying into protocols that complement Ripple's ecosystem, right? Just in case integration snarls kind of drag timelines. Okay, let's wrap up then, right? Ripple passing on an IPO is not just a retreat, it's a strategic swerve, right? They're leveraging a beefy war chest to snap up the missing Lego bricks of global finance. That's custody, prime brokerage, stablecoins, maybe even credit networks. It's high risk, high reward, and frankly, fun to watch. One day we might kind of wake up and realize Ripple quietly built the first full stack crypto bank while everyone argued over meme coins.